Good day. Al Kleiss here with Kleiss Commodity Advisors, joined with my friend and coworker Bob Linneman, and we're going to do the weekly Soy Market Watch update. Try to always keep these 10 to 15 minutes, not longer than that, but boy, we have a lot of information, so I'm going to jump right in it. Bob and I are both Series 3 commodity brokers, so every time we do a seminar, class, webinar, we need to do the industry required risk disclosure statement. And this first sentence states that an investment in futures contract is speculative, involves a high degree of risk suitable only for persons who can assume the risk of loss in excess of their margin deposits. And so this lets you know that you can lose money if you trade futures and options. Also very important is the last sentence in the last paragraph. The opinions expressed herein are the opinions of the author only, not the opinion of any firm the author may be affiliated or associated with. So think about this. This is the Kleiss team. There's not just Al Kleiss. It's got a good group of guys that I work with, and we meet and talk about the markets all day, every day. Today, we're going to go through the market review, what happened last week, look at a price summary, comparing prices to a year ago. Three main factors to watch this week. I'll be honest, I had a hard time getting it down to three. Planning progress update, chart update, and what to do this week. What happened last week? USDA crop report came in at 24% planted, 2% ahead of the 5-year average. And I don't know, I think when our customers, Bobby, we're always surprised that the number's as low as it is. Usually when I've talked to customers last week, we had a lot of people, Iowa, southern Minnesota, that were done planting, and yet nationwide it was only 24%. I do realize southern Illinois and some of the Delta has stayed really, really wet. The soybean planting, 18%, 4% ahead of the 5-year average, and I don't think this has got to be a record. So many farmers in Iowa planting soybeans before corn, 25% complete by the third week of April. U.S. stock market rallied for 9 straight days, the longest run since 2024. And so this was quite an impressive week in the stock market. Basically, everything we lost when the tariffs was announced was gained back in the stock market. Trump trying to ease this escalation of the tariffs. His administration, some of the officials saying it's not sustainable and we need to de-escalate. And so this was viewed as positive for the soybean market, especially, and also for the stock market. What happened last week? Soybeans closed a penny lower, but well off the early week's lows. Soybean prices closed lower for the third straight week. Right now, today, we're down a little bit again. Futures are right at support. And again, basis is doing the heavy lifting. As futures have been drifting lower in the corn market, basis levels have continued to improve. So when you're making grade marketing decisions, you're always aware of the futures, but equally important, a separate decision is what you should do with basis. US dollar, I usually have this up first every time because this is so important. And we really got crunched hard into 3 weeks ago. We went down to 97. There's a lot of moving averages, Bobby. I think crossing right around 1018, 102. But you can see that this has been a tough level of resistance in here, and the dollar's moving lower again. During most of Trump's first administration, the dollar was down at 95 to 97, and we got later into his administration that lower dollar really helped propel the grain markets higher and was especially beneficial to the soybean market.
I do think, Al, that that dollar index, the target, the long-term target that a lot of traders are looking for is in that just underneath 95. So it's right in that window that you had just mentioned.
94.80, I think, was the low in the long-term chart. Now, I'll admit this is kind of a complex chart, but it's one I really like. I'm a chartist, and the Shanghai Stock Index is the major. Think about it as the Dow Jones of China's stock markets. Back in 2007, this index hit 6,000. This is when China had a booming economy. Everything was going good with their exports. They did not have any major governance problems, but boy, when things tipped over in the global financial markets in 2008, U.S. stock market, Chinese stock market really went down, corrected all the way down to 1,500. So that was a 75% correction. We had the rally back into 2014, and now we've just been chopping along in this narrow trading range. Kind of disheartening that if you put money in the Chinese stock market in 2007, you've lost about 70%. U.S. stock market, just the black line, the Dow, trading at about 20,000 during the financial crisis, drifted down to, I think it was 16.5. And since then, wow, look at that. The stock market has just been moving higher and higher. And not putting this up to brag about the U.S. economy or U.S. stock market, but we really depend on each other. We need China to manufacture the goods that we sell at Target, Costco, and Walmart. They take that money and buy our treasuries. And so it's kind of a good relationship as long as it's fair and equitable to both sides. And so that's kind of what we're fighting about. I'm pretty confident that we're going to start seeing some middle ground. We did see China on Friday announce that they're really trying to work to stop the reduction in fentanyl coming into the United States. That was a positive first step. There is lower level negotiations going on, and I hope and think that within the next week to 10 days, we will see the announcement of a bunch of U.S. trade deals done, but also possibly a meeting between President Trump and Xi. Last week, kind of a tough week in the corn market. Corn market closed 18 cents lower. We're still above the price level we were a year ago. Soybeans had a pretty wide trading range, 10.54 to 10.27, closing down a penny for the week. So we closed lower, but 22 cents off the low, and we're still down about $1.50 from a year ago. The U.S. dollar closed out the week at 100.01, down about 5% from last year. So I always like looking at not the day-to-day charts so much, but looking more at the long-term price action and what's going on. What's going to happen this week? Again, what will happen? Trump talked tough and faced the nation. But some trade agreements might be signed. And so he's saying we're putting very close to putting an agreement together with India, working well on South Korea. Japan is taking a while longer. But he did not indicate any agreement to reduce the tariffs in China. Crop planting, the progress report today at 3 o'clock Central Time. I'm going to look at 36 to 38%. Actually built this slide yesterday. If I had to guess today after talking to a bunch of people, I think it could be over 40. The key states to watch, Illinois, Ohio, and the Delta. And that's where it was really wet. I don't know if you watched the Kentucky Derby last weekend, but boy, what a muddy mess. And so that same wet weather pattern continues. Export sales, if we look at so often, we have lower markets early in the week, and then we get the Thursday export sales report, and we just continue to see that move higher.
And Al, with
Now,
that the U.S. planting this week too, we could see the Western Corn Belt really pick up pace, just because we're moving into a little bit of a drier pattern. It looks
yeah,
like on some of those forecasts where you get into the Eastern Belt, in the areas that are already wet, they kind of again are going to get hit with some rainfall again here the next 7 to 10 days. It looks like so the pattern could be where we see these crop progress reports showing the Western Belt advancing quickly and the Eastern, kind of maybe lagging a little bit.
hmm yeah, really frustrating. I had a longtime customer, Roe. She called from Southern Illinois and just said, doesn't the corn market, when's it ever going to wake up? We can't get in the field in the Springfield, Illinois, that area, a very, very productive land, very big production area. And just also looking ahead to a week from now, we get the May supply demand report. And this is always a very important report because that May supply demand report includes the USDA's first look ahead for 2025 and 2026. Chart update. I said we're down again 3 weeks in a row. We have good support around 442. We've struggled to get through 490. We did get some corn hedges off earlier at 508 in the May contract. And so we're testing support in here. I don't know how realistic it is to go back to $5, but I think we can at least go back and test resistance. New crop corn, rapid planting progress has put pressure on. We had the rally up here that peaked at 479. The next rally here peaked at 470. and now we're testing 436 to 442. Soybeans, last week we had this breakout above the March high, and we're corrected a little bit lower in here. We just have a series of inside weeks. You can see as this market's been basing, it's put in very classic M's and W's as we see things moving along. The December corn's been under pressure, but no beans, considering the outside markets, what's happening in the wheat market. It's really held in quite well. And so if you look at it, one of the chart formations we talk about, the Trading Academy, is a bull flag. So here's a flag bull, here's the flag. And to me, it's just a matter of time until we can pop above this double top kind of at 1040 and 1043. But this has been encouraging. You take a longer term look, you see higher highs and higher lows. Bob, have you done the math? If we pop above 1043, how high do you think it could go?
Yeah, so the when we look at those, it's an equal leg theory, Al, and the watchers here, viewers and listeners. So we were near 970 on the low side of there. We peaked around 10. I think that let's
Just
call
call
it
it
10.
1040.
Let's call it 1040. So you're roughly 70 cents there. You'd add 70 cents to our 1011 support level.
Yeah,
So that's very rough math, but that's kind of an equal leg theory idea that the chart that we like to watch on the charts. And if you look back there into February, where was that high? And does that
right up.
line
Yep.
up pretty closely
Yep.
with all prior highs or old resistance and that kind of stuff? And in this case, it's very close. So
Yep.
that is a level that we're watching closely. And one thing, Al, that we've talked about is what are the headlines that can push this market higher? And right now, weather looks, somewhat bearish to price because, planting progress is moving quickly. So really, it's going to come down in the short term here. Can we get something positive in the trade deals for the egg exports? And that really is, I think, kind of a big question mark, and no one is really wanting to step in on the long side of the grain market until we see what those are, because we just don't know what to expect.
Yeah, it's been interesting looking at the open interest data, how it's coming lower and lower. And a lot of your retail traders are just becoming a little bit disgusted. And so we're seeing some of the lowest number of traders, not trading volume, but traders that we've seen in the last decade. So you take all this and then you're saying, okay, Al, Bobby, what do we do? I think, I want to continue to have offers in above the market. If we would see that the administration in China agree to a meeting, I think you're going to get a what I call a terrier head rally off. But if we get up around 1098, get 80% of the beans sold, be looking to make a sale up here. Corn, I'm going to split this into two, 485. I think 490 is going to be tough to get through, and up to 518. We're just kind of running out of time for a weather scare. And again, this market is really extremely inverted. When you look at the July to September corn, it's backed off some, but still 26 cents difference. If you call your local elevator, go to their website, you're going to see that your cash bids for May and June are way above what you have in that August, September time period. So don't overstay the market. Many of you have got great crop prospects for 2025. And so if we can catch a rally back in here, you don't want that old crop premium bid to disappear. I know you don't like the prices. I really don't like the prices, but it's a lot better to make these sales in May, June than hang on to August. I see a pricing timing pattern quite similar to what we had last year, and storing into August last year was a financial mistake. I think it will be again this year. So we've worked through this, I think, fairly quickly today. Next Monday, we have the USDA reports. But if you have questions about what I've said or Bob said, just give me a call. This rings right into the office in Wayzata, Minnesota, 888-345-2855. If you're watching this late afternoon or evening, you can also email me, alan.kleiss@wedbush.com. I want to thank the Iowa Soybean Association for sponsoring these, and please don't hesitate to call.